In my opinion, the big story that all of us should be watching is this short article published by the Wall Street Journal this morning on Friday. It said, the Federal Reserve Bank of New York will offer to add at least $75 billion daily to the financial system through October 10, prolonging its efforts to relieve funding pressure in money markets. In addition to at least $75 billion in overnight loans, the New York Fed said in a news release that it will also offer 3 separate 14-day repo contracts of at least $30 billion each next week. The Wall Street Journal went on to say the Fed will conduct further operations as needed after October 10. On Friday, banks asked for $75.5 billion in reserves, $550 million more than the amount offered by the Fed, offering collateral in the form of Treasury and mortgage securities. The Wall Street Journal's article said the Fed's operation was the 4th time this week it has intervened to calm roiled money markets. Rates on short-term repos briefly spiked to nearly 10% earlier this week as financial firms looked for overnight funding. The actions mark the first time since the financial crisis that the Fed had taken such measures. Doc Burkhart and Edward Zoll are here to discuss the Fed's emergency actions, plus many more news stories from around the world. Gentlemen, that is a shocking news story.
Now, if you just take the $75 billion per day, Rick, it doesn't sound that big anymore, does it? I mean, just
to me it does. $75 billion.
But
the Fed is pumping $75 billion per day into the financial system to keep it afloat. That's big.
But it has already put in $425 billion just in the past 5 days.
Yes.
And if we're keeping this in place until October 10th, do you know what that math takes you to? Nearly $2 trillion. $2
trillion?
Yes. Think about it. It's already up to about half a trillion. You got $500 billion already. $75 billion a day through October 10th. You're looking at $2 trillion. That's a big number then.
Oh, my. I haven't seen anything like this since the days just before the collapse of Lehman Brothers in 2008.
And the Wall Street Journal subtly puts that, in the center of the end. Oh, this is reminding us of the last financial crisis. Hello, okay? That's a big deal. Every time our countries look down the barrel of the increasing debt, which we've mounted up through government malfeasance and the foreign wars and the funny money that we love to keep the economy high on here, we've had major turmoil at home, and even at times talk of martial law being declared.
That's right. I saw this story pop up on Wall Street Journal, CNBC, Bloomberg this morning.
Right.
Then when I went back late this afternoon, prior to coming out here in the studio, I couldn't find the story anymore. I'm talking about the financial news websites. They had removed it from the front page of their websites. Now, if you search for it, it would come up in the search. It wasn't like they deleted the story.
You had to actively search.
You had to search for it. So if you did not know that story was on the front page earlier this morning, around 11 a.m. Eastern, you would not know that it ever existed.
Right.
So obviously a message went out from somebody. Play this down.
We don't want
get it off the front page.
The average person to freak out.
We don't want people thinking about it all weekend.
They might take it seriously.
Right. And
they might do the math and figure out $2 trillion.
To help our viewers and listeners get a handle on what's actually going on here, banks sometimes have to borrow money when they're low on cash. Banks, financial institutions, they need it for a short-term loan, right?
So when they talk about repo market, they're not talking about repo in people's cars.
No,
right? It's a repurchase of a bank is what, putting securities on the market
Right.
overnight.
Right.
These are U.S. Treasuries.
It's a short-term borrowing for dealers in government securities, and the dealer sells government securities to investors. And again, as you notice, it's usually on an overnight basis, and then buys them back the following day.
Right. So the promise is that the seller is going to repurchase the securities the next day.
Right. So the idea is that usually they'll borrow 5 or 10 billion, and that'll just be a bridge. But earlier this week, we saw numbers of 50, 75 billion being borrowed, and then that there wasn't enough cash in order to meet the demand. And so then the Fed had to step in and start putting money into the system.